Good morning, one and all. This is Ray from Next Forex Trade. Today is Wednesday, the 25th of September 2019. And let us kick off and see what is going on in the market. Here to teach, not preach Forex. So, let's just start off with a quick overview of the strategy. It's a time frame correlation based strategy based on price action. We're looking for trending price action first of all. So, first of all, we're looking at the daily chart. We're looking for signs of lower lows and lower highs in a downtrend, or higher highs and higher lows in an uptrend. If that's then present, then we use the standard deviation around the price to give some idea of value for money. And if you're unfamiliar with the standard deviation, this here is the standard deviation tool. Oh, I don't know what's going on with my things at the top there. Yeah, so this this tool around here is a standard deviation tool. When you add it, it looks like this channel thing here. So this, in a downtrend, we're looking for the price to be overbought and for it to be signs of a reversal, so it comes back to the average. And in an uptrend, we're looking for it to be oversold, so to be in a lower edge here, and for it to move back towards the top edge. So firstly, AUDCHF. So we've got signs of a downtrend here. Standard deviation around the price. We can see it was overbought here. There was some signs of zonal resistance where the price had previously interacted with support as well. So the price has fallen away from that. And these lower time frames as well are looking, I mean, the 4 hourly and the hourly are looking pretty good in terms of its bearishness. So these are showing lower lows and lower highs, representing this move here. Price is neatly within the standard deviation. Now this, as I mentioned in yesterday's video, for me the most sensible stop loss that makes sense on multiple time frames would probably be above this lower high here on the daily. Now that would be this level here if we're looking at the lower time frames, or this one here. And generally that's quite a wide stop. I mean, the problem with it being that wide is that it takes our profit target. It means that we have to have a smaller position in first of all, and it takes our profit target much longer to get hit. So this is about 150 pips from where the price is now. So about 150 pips is around this level here on the daily. So that is quite tricky to make, because we've got to break this previous low here, and generally, yeah, it's just asking a lot of the market. Nevertheless, if I wasn't already in positions already, and if there wasn't better stuff in the market, one way that you could play this is look for something by using these highs here maybe. So having a stop loss above these levels. What's going on with my charts today? So shorting as it is at the moment, because these are nice reversal signs that we've seen off of this standard deviation here on the multiple time frames, showing a sign that the price could move lower still. So rather than using this high up here as a reference point for a stop loss, you could use these previous lower highs here, because there's still enough reference in the price action to allow for that. That will allow for a stop loss that is so how far would this be? Let's just do a quick calc on this. It's about 120. So from here, from an entry here, that would mean just eyeballing this. Still not great. I mean, it's going to be bang on around these previous lows here, but it's better than having to move beyond the previous low. So yeah, it would be tight. It's not the greatest of reward to risk, but you know, if you just wanted to test something out, just see how this works, I would suggest, you know, if there wasn't better stuff in the market, I'd be thinking, wouldn't be even willing to put the whole 1% I'd normally put into this, maybe 0.5%. 1% would be the max. Probably wouldn't look to scale into this either. So 0.5% to 1% on this with a short, stops above these types of high here, with that 1-to-1 reward to risk. So yeah, there is opportunity in this, but not to my liking at the moment, not my cup of tea. There's better stuff. I'm in stuff already as well. So next one, AUDCHF. Yeah, I'd leave this for now. Or would I? Let me just. Sometimes this can it can be helpful just to see what the bigger picture is there, because from yesterday I'd had this in here, taking a look at this retrace, but really the bigger move here is this move here, or even more recently this move here. So there's reason to be bearish on this. If we were looking at the weekly, that would certainly have context. And this retrace here is now kind of starting to break price structure. We can see that this was producing higher lows and higher highs, but recently it's broken out of our standard deviation, and it started to produce these lower highs and lower lows. So that gives context to this move here. And you know what, our lower time frames are quite bearish at the moment as well. Yeah, I mean, if this this here is similar to the last one we looked at, where ideally the stop would be above these levels here, right? So above here, this lower high on the daily. It's a bit overstretched here, but even from here now, the reward to risk is better on this, or it's a more probable trade, because we'd need 160 stop loss here, and yeah, it falls a bit better. So between the previous one, AUD, whatever that was, AUDCAD and AUDCHF, this would be my favorite trade, just because of where the take profit would lie. It's not beyond these previous lows, right? The price doesn't have to break and make new lows to hit your take profit. So if I had to choose, it would be this one. And the way to structure this is, I think there's good enough price action here already on our lower time frames to warrant an entry now. So if the price is something like this when you're looking at it, this is good enough for me. So a stop loss above these previous highs here with a 1-to-1 reward to risk looks quite probable, quite viable. And should the price start to, you know, go inadvertently against you, so stop making these lower lows and lower highs and start making higher highs and higher lows, there would still be the opportunity to pull the take profit to break even to protect that capital, but ultimately be looking for this to move much lower. So yeah, I would see a trade on the AUDCHF that is quite viable. So yeah, that's another one to take into consideration. So let's move on. AUDJPY. So let's just clean these up a bit. And sometimes it's just, if you've got a lot of mess on the chart, clean it up, just delete it and start again, just so that you look at it with fresh eyes. That's why you'll see I don't use any indicators really. I have on the daily, I've got the ATR, which is just sometimes to give me some indication of how viable the price is to hit a certain price target within a day. So this tells me on average how what the distance of the daily bar will be from highest to lowest. So I use the ATR for that. But other than that, there's no other indicators. I'm using price, price here to guide my decisions. So AUDJPY, bearish on this overall. Similar story to the other two that we've looked at, but I would probably leave this. This is a similar one to the one we just looked at, the what was it, AUDCHF. So this is a very similar story to that one. So it's a case of picking between those two. And when it comes to that, I would just look and see what the swaps are to see how that could impact as well. So AUDCHF, because if we're shorting this, you need to know if it's something that you need to carry for a long time, how much the swap could impact what you know, on your profitability, because that does come in as a cost. So on this one, AUDCHF, it's minus 5.4 to short. And what's the other one? AD. Yes, very similar. So it's much of a muchness, because both of these swaps are very similarly priced. But yeah, these AUDJPY and AUDCHF have very similar setups, which you know, they're, you know, almost identical in how you play them. So those are looking pretty tasty for shorts at the moment. AUDUSD, same story. This isn't as great because of where the stop loss would be from here. So this really wouldn't be my favored one, because shorting from here, then the stop loss above here is the most sensible place above that lower high. And that pushes at, you know, I can just eyeball that and see at 120. It means that the stop loss is going to be down around here. So it goes beyond these lows, these previous lows, which is not my preference. I want to take profit, even on a 1-to-1, ideally to be before these previous lows here, because it's just a more probable trade. Yeah, opportunity to short on this, but there's better stuff out there that we've already discussed. So I would pass on AUDUSD. CADJPY, very rangy. Don't really like this kind of price action. It's not great in terms of readability. Yeah, again, this looks nice. So CADJPY, you know, bearish overall. Lovely lower lows, lower highs on the daily. Can see that it pulled away from that previous high there where it was resistance, encountered support, zonal support here. So there's good reason to consider a stop above that level and the price to move away, as it has done. Now, for me, I would like to see a bit more value for money on the 4-hourly here. So for it to pull back and interact with our upper edge of our standard deviation up here. And show a reversal from up there. But all in all, you know, the other time frames are looking pretty congruent with what we need the price to do. So bearish, lower lows and lower highs. So if I were to enter this, what I'd be looking for is the price to pull back, see a reversal off of these types of levels, and then move lower. And what's important in everything I'm saying here, I'm not looking to trade all of these. I'm just looking for the best one or possibly two trades that are not correlated, so they don't move in either the same direction or negatively correlated, don't move in opposite directions. So it's kind of picking the best, so that, you know, I'm putting my capital in the best trade that I can see, rather than, you know, increasing risk unnecessarily. So this here is the CHFJPY. This is a position that I've added to this. I've scaled in because the price gave me the opportunity to do so. So this, if we look at the, so we can see here, got one position around about £11 and another at minus 26. Yeah, it's just the price is just doing what it's doing. It's doing what I'm anticipating it to do. I've entered based on the lower lows and lower highs on the daily, the price being in an overbought area and falling, a likelihood of falling away and moving lower. I get a sense that this could take a while to come through, but you know, the swaps are low enough that I can hold it over several days without it having a massive impact. And we can see in the 4-hourly at the moment that the price is is showing signs of bearishness. It's coming up. It's at the moment it's interacting with the upper edge of our standard deviation. So what I'd want to see on in the next few hours is the price to start to fall away again, start to move lower. So attack these lows here and, you know, go for towards a profit target as well. So I am using price action to guide the exit on this. So these are kind of arbitrary levels that are in there, but I will be using price action to help guide how I exit this. So at the moment there is 2% that I'm risking overall on this. So stops above these previous highs here. So this high here is the same as this lower high on the daily. So yeah, looking to just see how this one pans out, looking for bearishness to start to come back into the market and this to move lower. So I'll look at how that works out and I'll get back to you tomorrow. So this is Euro AUD. Euro AUD is obviously bullish. Lots of lower lows, higher lows and higher highs. Yeah, okay. So the 4 hourly started to show a much better story in that this is more evident now. So this move that we've seen in the daily is clearer as something that can fit within a standard deviation on the 4 hourly. It's just the way that this moves. It's very rangy, and this area here is looks to be quite pivotal, where we've seen the previous support here as well. But having said that, the timing on this is okay. As to where the price is now, you can see it's in a very oversold area with lots of reversal type candles appear, and it's come off of a support kind of zone as well. So where these previous highs here, this area here, these previous lows, probably goes back as well. So there is context for what I would deem a more risky type of trade based on the lower time frames, because the problem with this at the moment is going for the safer trade with the stop loss above the daily higher low, this one here, which is the same as this one here. It pushes the take profit. Let's see what that would be. That's about 340. You know what? No, it stacks. Yeah, I mean this does stack because you going on a one-to-one, just on a one-to-one, it would mean that the profit target is going to be around about these levels here. Okay. Which would be before these highs here, which is good. It's just and again, sorry if it's kind of jumping about, but a lot of the time this is just my thought process as I weigh up a trade. So it's just me explaining to myself and then explaining to you. Yeah, the longs, the swaps on these are quite hefty. I mean, with my broker it's 8.7 minus 8.7 to be long on this. So the way this price action's moved, it could viably take a long time to hit the take profit. And with such a hefty swap, you just need to think on that. You know, that's going to eat into your profit, especially if you're just going for, you know, one-to-one on this. So yeah, it's tradable. Stop below these lows here. There's a position on the 4 hourly now is good enough to warrant that to be long on this. You could do, and it's not my preference, a more aggressive trade. So go long on this with a stop below these lows here. Right, so this would be a trade based solely on the 4 hourly, where you're taking a position with a stop below here, and your one-to-one take profit would take you out before this level here. But my reservation of trading that way is that you've only got confirmation on one time frame, or you've only got stop loss that makes sense on one or two time frames. Really, when you go for the positions that make sense across multiple time frames, then you've got a more likely trade. So yeah, the idea is there if it's something that you want to trade. If you've got any questions on that, then, you know, let me know in the comments of how you might play that out in future. But it's just not my preference at the moment, so I would pass on that for now. So this is the other trade that I'm in. So this is on. So sorry, distracted there. So this is on EURCAD. So this is a short that I have in. This is another one that I've scaled into. Again, just happy with the price action on this. I've got some good position you know, early on, where the price had started to reverse off of the upper edge of our standard deviation channel. Saw that, so I've added to this as well. Again, happy with the position in terms of where, oh, you can't see that, one sec. Yeah, so these are the two positions I've got in. So this, yeah, all our time frames are pretty much saying bearish at the moment. Daily low lows, low highs, 4 hourly low lows, low highs. And you can see the way that I've kind of structured this is what I'm doing. I've got my stop loss above the lower highs on multiple time frames, so there's a clear indication of where I'm wrong. It's outside of the standard deviation, so if it does reach those levels, it's a good indication, good sign that I'm probably wrong anyway, so good time to be out. I've got my take profit sensibly placed where it's you know, prior to these lower lows here, so it's above that. It's also above where the standard deviation would be, so there's a good price. The price could fall within that level in any case. This is slightly less than 2 to 1. Sorry, 1 to 1, because of where this additional entry is and where both of the take profits are. But it's about 1.89 or so to 1. So it's not. Sorry, what am I talking about? It's about 8. So it's about 0.89 to 1 in terms of reward to risk. So I'm risking more than I stand to gain, if that makes sense, because of where this additional entry has been and both of the take profits at the same level. Now, typically you just, there's no hard and fast rules in terms of how you trade. It's just knowing what you're putting yourself into. I know that here I'm risking slightly more than I stand to gain. It's 2% of my capital that I'm risking overall to gain just under 2%. So I know that from the outset. So, you know, if anything goes wrong, I knew what the risks were from the get-go. And really, that's what you should be thinking about when you take positions as well. Just know what can go wrong or what you're setting yourself up for before pressing the buy or sell button. Because after you've done that, it's too late. So I'm prepared for what could happen here, and I've positioned myself accordingly. So I'm happy with this setup. Again, I will come back to you in the week to how this progresses. And as well, I mean, if you were to enter this now... How would I enter this now if I wasn't already in this? If I was opening a new position on this, I'd probably look to, well, basically where my original position was. Maybe look for some more value for money, wait for it to pull back on the 4 hourly before considering shorting this and adding, or you know, opening a new position, because it's a bit too late in this phase now. If you want to open a new position. So yeah, if you're looking at it today, wait for some pullback and then consider shorting if you see some reversals. So let's move on. Euro CHF, no, that is too far gone, hitting support. Don't want to sell into support. Bearish overall though, but need better signs of value for money. Euro GBP, nope, don't like that price action. EURAUD, like the other JPY crosses we discussed, needs to 4 hourly, needs to find some value here, so to pull back to our standard deviation, show some reverse signs off of that, and then move lower. So no for now. Euro NZD, nope. Euro USD, no, I'd want the daily to find some better value. Shorting now, I mean, there are arguably some signs of bearishness on here, but shorting now, I'd be just too hesitant because of this support we started to see here, right? You'd be selling into that support rather than selling off of resistance up here. And when you sell into support, then, you know, there's a good chance that after you sell, the price is going to bounce and you're holding, you know, a losing position, even though you might be right overall on the move. Avoid selling into support and voice of like try to sell off of resistance. So for me, that on the daily, this needs to pull back, see a reversal candle like this type of candle here. And it would also make more sense because it would have been interacting with these previous lows as well, and some of these previous highs to show signs of bearishness. So yeah, Euro USD no for today. Nope. Pass on that one. No, these are conflicting. So I'm seeing bearishness on the daily here really, and the 4 hourly and other time frames are showing, you know, it's mixed bags really. This is bullish, this is bullish, this is quite bearish, and I want them all to be saying bearish, so pass. Same story on this one, mixed bag. This is bearish, bullish. Yeah, bearish there, but finding support here, so yeah, messy, pass on that. Same here, pass. 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 It's bearish, bullish, bullish. Signs of bearishness. Want this all to be saying bearish, and a lot of them are still reflecting this retrace here. So pass. Needs better value for money on the daily. It's okay where it is now, but I'd want to see it come and interact with the upper edge of our standard deviation. So some sort of reversal candle, and then the price move past the low. So overall, yeah, bearish on this, but timing isn't quite right in my opinion. So it needs to see better signs of value come into the market for me. So pass. What's going on with this one? Yeah, it's not bad. There's better stuff out there though. I wouldn't want to EURCAD trade out of this. Have a look at some of the early ones I've mentioned in this video. If you're joining now, just rewind the video once it's published. Because yeah, it's tradable, but there's better trades out there for me. So NZD USD, yeah, same thing here that I was talking on the other one. I'd want to see it find some value in the daily, so pull back and show some signs of reversal. So no. Oof. Choppy, no. Pass. This is better in that it started to break the price structure on the 4 hourly. So overall on the daily, seeing some, you know, bearishness, and this had been quite bullish to date, but in yesterday's market it started to show like this here was a higher low, and the price has moved past that now. So this is giving a bit more context to this move coming down here, which we're starting to see materialize on the hourly as well, with low lows and low highs. However, just eyeballing this, let's just see how significant that is. Yeah, it's good. It's good that it's broken some key levels of support, and it's started to show signs of bearishness as well. What I would want to see is, like some of the other, I think it was the JP crosses, maybe just some more value on the 4 hourly. So wait for us to pull back to these types of levels and the price to move past the low. It will make sense on the hourly as well, because it'd be a move back to this same higher edge of our standard deviation. See reversal as well for that, and the price move lower, and you could have a stop loss above these highs here. So it's these highs here on the daily, these highs here, these highs here, and you know, 1-to-1 on this stacks, because you know it approaching these lows here is really the kind of area to be worried that the price could be too oversold. So this would stack in terms of a trade, even on a 1-to-1 raw to risk. So yeah, potential in the USDCHF. So USDJPY, exactly the same story as that last one we looked at. This might even hit it sooner. So, but let's just see how. Yeah, so it's convincingly broken through its standard deviation here in this move yesterday. Started to make lower highs and lower lows as well, giving some context to this move here. This was a pretty tricky area of resistance. So these previous highs, price had a lot of trouble moving through. You can see these areas of support that go back. They probably go back much further as well, but there's enough context for a stop above this high here. Yeah, I would favor this as well. Again, just waiting for some value to come in on the 4 hourly, so for it to pull back. It would be the same on the hourly. So waiting for some better interaction off of the upper standard deviation channel and a reversal candle and a move past the low. That would allow for a stop loss above these levels here, and shorting this for 1-to-1 and beyond. Bitcoin, last one here. Oh yeah, it would have been stopped out on this based on the previous suggestions that I'd made, but it was definitely a good time to be out. It's broken this previous support that was holding true, which is why that we saw in yesterday's candle as it approached this support. That's why it was such a violent break. This candle here, it's just so out of kilter to what the other ones were doing, because as it was approaching this level, it's a very sensitive type of level. So it's broken through, and this is certainly one to leave, in my opinion, if you do trade Bitcoin. I don't a chart for me is a chart, so as long as there's enough price history, I can read it and interpret it. But this is looking more wait and see for the moment, because this level here was quite a key level. It's broken through, so for this to be more readable, it just needs to develop more, so that there's more that can read into it in the way that I trade. So yeah, it would have got stopped out on this, but the reward to risks that I was previously discussing made it viable. So yeah, pass on that for now. So yeah, that's it for today. Again, do remember to subscribe to the site so you can get updates, ask questions. There's some questions here, in fact. So Prince Philip OG, UAD looks like a 23 retrace to the upside, and he's asking about Bitcoin as well. Okay, let me just I'll just go quickly back over Euro AUD. So Euro AUD. So you're saying there's a 23% retrace, 23.6 retrace to the upside. So presumably looking at this, I don't know, is that right? And I'm switching between screens, so I don't always see these as they come up, these questions. But yeah, I mean, basically, I only look at Fibonacci. I only look at Fibonacci to confirm what I'm seeing in the price action. So for me, even though that's saying 76 the same thing, let's go like that. So if I see that there's price action that I can visibly see where there's support or resistance, and it just so happens to coincide with a Fibonacci, then yeah, fair enough. But I don't use it in isolation. But yeah, I mean, you could read fib levels into there. For me, that's not really interacting with it perfectly, so it doesn't really have much context. I just let the price guide my my decision as much as possible. So you're asking about gold and Bitcoin. Went over Bitcoin. Just have a look at gold. What's gold saying? I mean, at a snapshot, it's a bit overbought. Let's just have a quick look. I can't see an entry on this at the moment, personally. Even using this move here, this was kind of the area to get in. It's kind of moved away from that now. So I'd want to see a bit more value, but definitely bullish on this at the moment. Let's just see. Yeah, even, I mean, if you wanted to trade this aggressively, you could use the hourly and just wait for, at least some value to come back in. It's just a bit too expensive, a bit too overbought at the moment. So waiting for some value to come back, maybe if you just use the hourly, this area here of support makes sense. So these previous highs, these lows here, and it would also come into kind of collide with our standard deviation as well. So seeing a reversal off of that level would make more sense, and trading it very, very aggressively, you could use the hourly, for example, with, you know, stops below this level, these kinds of lows here, or these types of lows, going for, you know, 1-to-1. That would stack, but obviously the most conservative trade is using these lows, which is this low on the daily, which would, you know, make sense across the board, because look, you can see, come on, you can see this crazy amount of support that we're seeing on the daily here. So this is obviously a key level to have our stop below. So yeah, so to trade this the most conservative, wait for a pullback on the hourly, see some reversals, stop loss below these lows here, which clears it on multiple time frames. It clears it on the hourly, it will be the 4 hourly, it will also be the daily. So you've got clear indication if you're wrong, if the price starts to move much lower. The problem with that, having such a wide stop, would mean that it takes your take profits way beyond the previous highs, as I've discussed already in the video, which isn't my preference. 1-to-1 would probably be around these types of levels here, so it would need to break those previous highs. Obviously you can get over that by having a smaller position, but a more riskier one by using these lows here. Or yeah, I wouldn't really, you could do that so that it's below these previous lows, but I prefer these ones at the most. Hopefully that's giving you some context and being of use. So yeah, back again tomorrow, typically between about 7 and 8, sometime between 7 and 8 a.m. UK time. But yeah, I will see you guys tomorrow. Bye for now.